legendary investor and Berkshire Hathaway CEO releases an annual letter to shareholders, and the latest came out just this Saturday. This is something the market always eagerly anticipates, and I waited all weekend to make sure I could get through it. And when I did, I had two key takeaways. Number one, Japanese stocks. Now, where Warren puts his money is something the market always follows, and the list of stocks in America that Warren Buffett invests in is very well known. It's the likes of Bank of America, American Express, and Chevron. But the emphasis in this letter was actually on something different. It was investments in Japanese trading houses, 5 specifically: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. And the reasons why Warren likes them? Well, because they look an awful lot like Berkshire Hathaway themselves. Large, diversified, and with global operations. One thing a little bit different, they all pay out large and relatively stable dividends, with all that cash going back to Berkshire Hathaway and to its investors in turn. And my number 2 takeaway, but perhaps just as important, Berkshire Hathaway is itself a publicly traded company, and the fact that Warren Buffett has been there as CEO for so long has provided comfort and stability to the investor base for a long time. But that may not be the case for too much longer, because in Warren Buffett's own words, he said, "At 94, it won't be long before Greg Abel replaces me as CEO and will be writing the annual letters," making the wisdom of Warren even more important to get right now and focus on things like his Japanese investment thesis even more critical.